Okay, so this week, after we had the big move last week, this week we had not quite the same outcome, although we did not really backtrack very much, which I had expected maybe that the markets would um, reverse after the big run up last week. But so it's the market's been treading water here pretty much the whole week. There were a few things that happened that made things interesting yesterday and today, um, but overall, it just kind of stayed where it was, and we have not had the short term pullback that we may still get, but in some of the indices. So let's take a look at the markets, and we'll start with the Dow Jones Industrial Average. So here we have looking basically, these are daily data. So if you look at this week, starting this candlestick right here, uh, you know, pretty doji that day. Thursday, um, Powell spoke. I'll talk about that when we get to economic calendar. And then today, we just had, it was kind of a surprise, but it picked up and uh, launched basically the entire day up into some resistance areas. And I'll talk about these blue lines a little bit later. Dow Jones Transport is recovering. When things were getting bad, we said Dow Transports. Now Dow Transports, just the history of it, used to be a big deal, right? I mean, it was the technology of its day. So how transportation went, so did everything else, and it's still an important factor, but it's certainly not like back in the J.P. Morgan days, and so we want to see this recover. It falling apart like it did when we were going into the Dow trend certainly isn't a good thing. The S&P 500, had been in this decline. We got those big moves last week, and then this week, like I said, it wound up for the week. If we look at the weekly data, we had an up week, but it certainly wasn't anything like the week before. And my expectation was that we'd get some type of a pullback, um, you know, 50% or so. So there's some strength in the market right now as far as upward pressure. And then we have the Qs, which primarily technology stocks really took off today. An $8 move in the Qs is uh, really unbelievable. I mean, that's a great day to go up 2.25% in an indice like that. We also had the Russell, the IWM. Had a It was really having kind of a rough week compared to everybody else. Um, it really fell apart yesterday, and then started to make somewhat of a recovery today. But this particular stock has recovered. And I think I put up here this past week. You know, use of the Fibonacci. Uh, you know, Getting a retrace, we retraced right down to what they call the golden zone between 50% retrace and roughly 62%, went a little bit below it, and then it started popping from there, as you would hope. So the fibs work pretty well, actually. I found on SPY and SPX and the Qs. They I'm not saying they're completely reliable, but I pay attention to them on here. So that was the Russell, the 10-year, and again we're on daily on the yield. Um, pretty much stayed flat. I mean, when we look at the week, the yield was actually up compared to the week before on the weekly data, and but it's kind of hanging there, but below this trend line. And then we had the DXY made somewhat of a recovery this week. Last 5 days, four of them were up, and then the today was down just a little bit. So, we're still wanting to see this continue its slide downward. So, to a certain degree, I mean, you don't want it to go too far because then things that we buy become more expensive. Then we have crude oil. We had a big drop on Tuesday, and then just kind of stabilized the last 3 days of the week. So we're still in this downtrend. Nothing's broken the downtrend yet. And then the VIX got crushed down really, obviously last week, but just continued to make its way down, which you would see in a kind of a bullish atmosphere. One thing we haven't made any progress really is on the breadth of the stocks. The percentage of stocks above the 200-day average actually went down despite the markets being going up the last couple of weeks. And we look at the weekly data. I mean, we had the big one go up last week, but it came back a little bit on the week. And kind of surprisingly, the put call ratio of 0.96 is still a bit elevated. There's a lot of still skepticism. We'll take a look at that as we go through the economic data. So let's talk about what was reported this week. It wasn't a busy week, as I had noted earlier. Let's collapse these down a little bit so we don't look at everything. I mean, we've had a lot of Fed member speeches. Not really much came out of them. I was looking on Wednesday. And obviously had the mortgage rate drop down. That's significant. 0.25% in 1 week is pretty big. But Fed Chairman Powell, he spoke. There wasn't much that came out of that one. And then we had initial jobless claims pretty much came in line, a little bit, 1,000 less, really nothing. But on Thursday, we had a couple of things happen. And I can only go off of what was reported, but supposedly at 1 o'clock on Thursday is where, and it was, happened to get a notification on my phone that Powell, or excuse me, the auction got run up. So it came out higher on the for treasuries than what they expected. In other words, they expected maybe they'd sell at a 4.75%, but it went up to 5%. So that means even more pressure on our debt that we're carrying, the $33.5 trillion that we have. And so that became more expensive. And you saw an almost immediate reaction at 1 o'clock, a little after 1, where the market dropped. I don't know how, across the board, 0.5% pretty quickly. And then at 2, Powell basically did his tough talk thing, saying, oh, we're going to keep those rates up and we may have to hike another, and all the other stuff that he says when the markets are when they've made big moves like that. But it was funny, he didn't really say anything like that on Wednesday. And then there's kind of the joke of, Powell apparently, I think it was during this speech on Thursday, he had some climate activists, protesting his speech or protesting against climate change or something. But anyway, he used the F-bomb, telling them to close the effing door to move things. So that got some play. And then Friday, we had the Michigan consumer sentiment. Actually came in lighter on today, and that seemed to kind of ignite things this morning. The fact that this came in, less than expected at 60.4%. They were expecting 63.7. So before I go into next week's calendar, I just want to briefly look. We haven't looked in a while, but look at the difference. Obviously we had a big run up last week, but went from 24.3% bullish to 42.6% here, and bearish went from 50.3% down to 27.2. Now this survey is looking 6 months into the future, but what's interesting to me is the fear and greed index didn't move as much as I thought. So a week ago we stood at 39, and we were at 32, a month ago, and probably what was it, 2 weeks ago, 3 weeks ago, we were down here in the teens. So we've made somewhat of a comeback. We're still in the fear mode, which is interesting to me that people might be still fearful based on some of the data that they use here to figure this. It's climbed. What will it get to? I don't know. But right now, there's still fear despite the big move last week, and I think everybody's kind of expecting some type of big pullback, and they may be waiting a long time, because if you base it off of some of the data that we've seen this week, just looking at now, it just kind of, it can go sideways too and achieve the same purpose as instead of a 50% retracement or pullback in the markets. So we'll have to see how the fear and greed index kind of plays out over the next week or two. Go back to the economic calendar on Monday. We're going to have the Federal Reserve members giving speeches all week long, as they did this week. The notable things here, obviously, the big thing is going to be CPI on Tuesday. That will be a market mover if it's out of whack either way. If it comes in at 4.1%, I think the market still move in a positive direction. It comes up anything, I'd say 4.3% or more, then probably have our pullback, some of those retracement levels, and then Thursday we have the mortgage rate. Hopefully we continue to see this number come down. And then we have the PPI, which is another market mover, and retail sales, another market mover. And then Thursday, we have initial jobless claims, and we'll have the Philly manufacturing. Also, we have the New York Empire State. Again, I tracked this. These are really where wealth come from, is from our manufacturing base. It's mere shadow. You got to remember, after World War II, we made 50% of the world's products. Now it's like 22% or something like that. Then let's see, we have Friday, building permits and housing starts. Those could potentially move the market. So we have a few things next week. The CPI and obviously PPI will be the big things that at least you would expect to move the market one way or another if they are out of whack. Now, my final comment has to do, I just want to kind of, whether it's an education or whatever you want to call it, but, we've been in this downtrend, and I always try and mark my charts with, that we had a downtrend, it got broken. There's something called the 1, 2, 3. So this would be 1, it breaks, comes, challenges it, the low should get challenged here, and it hadn't happened yet. But then it turns back. Now, it doesn't have to challenge all the way back down to where it was down here at 32,322, but you would expect, at least a 32% retracement, I think, is kind of the number. Usually it's somewhere in that, I'd say 50% range. you get a pullback too, and maybe one of these reports, CPI or PPI, might move them back. And so it's just something to track, because now we've broken this downtrend. It's come back up. Now, my expectation is that we would at some point come back and to this trend line before moving up. And there were a lot of trend lines that were broken. Some weren't. Transportation did not. S&P 500 did. We broke this. Again, I'd expect the challenge at least fill this gap here down towards the line before it starts its way back up. Hopefully it doesn't continue down. We have a higher high here. Now we need a lower high. Or a higher low, excuse me. Higher high here. We need a higher low so that we'll start build structure. So it kind of zigzags its way back up. The Qs, another trend line that was broken. Again, I would expect some type of movement back towards this trend line at some point. Doesn't have to, but that's at least my expectation. I mean, that it starts to build the structure in the market. This thing is pretty parabolic at the moment. Now, David Hunter would probably tell us that, he expects this thing to just, not straight up, but pretty much, maybe not the deep retracements of 50 to 62% you might expect on a Fibonacci measure, but more, maybe a 32% pullback, and then, continue up pretty much to all-time highs. And, we start looking at that. Here we are at 403.44, and we are now back close, looks like less than 7% to get to all-time highs at this point. So, we're making our way. Obviously, we got this hurdle here. We probably get some resistance here around 380, which we're close to now. And then again here at 387. But after it goes through 387, then it's pretty much a straight shot up to 403. Now, again, this would be David Hunter's expectation. And so he's kind of taken control this week with, some of the things that we have happening, in the marketplace. Crude oil backing off, some of those things. IWM, another one that broke out. Now it's already come back and retested here. So it's already, if we're doing a Fibonacci retracement, again, from the bottom here to here, it went down to that 62% retracement level. And that, they call it the golden zone between 50 and 62%. And that's a good place to potentially, if you're a trader, to expect a move back up. And, DXY still, even though we had this up, it's building its structure, right? But it's starting to slowly make its way. My expectation is, we go up, we come back down, lower low, a lower high, somewhere in here, maybe hit this here at 105.36 on the dollar, and then come back down lower again and kind of continue the path down. And crude oil, too, broke it. We broke it here, the uptrend as far as the price of oil, and now we're building the structure down, right? Here we go. Could go back up, hit 80 next week, and then make its way down again. I mean, that would... that's the expectation. So that's why I just wanted to cover some of the trends that are out there. I think it's important, to follow this. I covered the 200-day moving average as far as, being something that if you're an investor, get knowledge about what's involved in trading. Understand what a put is, understand what a call is, understand trends. There's a whole series of things, and I have links in my description of my videos that you can go back to, and you can educate yourself. If you took an hour, 30 minutes, 15 minutes, whatever you can spare every day, start to put together some of the knowledge, at least get some of these things implanted in your brain, so that you can become not only a better investor, but potentially move yourself slowly towards trading things that make sense to you. So that's what I wanted to cover this week. And remember, there's always a better way.